All right, we're live. Hey, everybody, this is Donette Palmer with Proverbs Financial Coaching. And this month, we're continuing our talk about the importance of having wealth partners, what they are, who they are, and how to find really good ones that will actually serve you and not sell you. A key part of our success is educating ourselves and getting wisdom. And part of doing that is finding wise counsel, as I call it, people that can come around us and help us to make those decisions. And there, this month, we're focusing on 5 wealth partners: the insurance, the financial advisor, tax preparer, estate planning, and coaches. And last week we had a financial advisor on that talked about the protection side of our money, protecting our money and our assets. Today I have another financial advisor with me, but he is here to talk about making your money grow and really building wealth. So I want to say thank you, Scott, so much for being here, and welcome. Welcome.
Well, thank you so much, Donna. I'm glad to be here. I'm glad to offer any information that I can. Excuse me. I'm having a little water here.
That's okay. This is a casual conversation, so just feel like we're sitting in a room talking with each other. Okay, well, gotcha. Let's start with learning about you. So tell us a little bit about you and your background.
So I've been a business owner basically for 25 years. I've really taken a lot of pride in making sure my clients receive the highest level of communication and service possible. Excuse me. A lot of people can offer the same products, but what it really boils down to is communication and service and really doing what's best for them as opposed to yourself. So after being very successful in business for over 25 years, I wanted to take it a step further and help out people with their investments and preparing for retirement, because I felt that was one area that a lot of people just weren't getting the service and the communication that they need out there. So here I am now.
I would agree.
And been very happy ever since.
Yeah, I would agree. They aren't. I find a lot of financial advisors want you to have this obscene amount of money. I wouldn't say obscene, but a lot of money, and there's no service to I would say middle class to low income people, or even people starting out like our college kids or our high school students. Nobody's really there to serve them. They're wanting them to have, a couple $100,000, and they're not really serving them and teaching them as they grow. And really, I think it's a disservice to them, but it's also a disservice to the financial advisor themselves, because that could be a really good client eventually if you just started with them from the beginning and just walk them through everything as they learn and grow. Eventually they're going to make more money, and they're going to invest more money, and they're going to refer people to you.
Absolutely.
Which is one of the best compliments, right?
Yeah, I want to touch on that real quick, just to let you know a few examples that I've had. I've had a lot of people ask me, Scott, I was just kind of figuring out, what's the minimum to invest with you? And I always reply very simply, there is no minimum. I know a lot of advisors that they spoke to in the past have said, 100,000, 250,000. To me, whether it's $100 or $1 million, $10 million, everybody deserves the chance and the opportunity to invest, no matter what they're starting with or what current assets they have. The most important thing is getting started and being coupled with the right advisor that really does look out for your best interest and really customizes your retirement plans based on your needs and what's most important to you.
And that is why I like you so much. So great. So what is your area of expertise?
So I primarily focus on individuals, families, setting them up for their retirement, getting them started, and, also working a lot with employers. I work a lot with employers in their ERISA programs, their 401ks, because, one of the reasons for that is a lot of employees and employers, they have the 401k programs, they have the profit sharing. But the reality is that I think I'd probably say 90% of the time when I ask an employee, do you have a 401k? They say yes. Do you invest in your 401k? Yes. does your employer match in your 401k? Yes. And then here comes the boom question, which is really the area that I'm trying to fix out there, is that do you know what you're invested in, and are you active in your 401k with your asset allocations and making the changes appropriate to market conditions? And 90% of the time they say, I have absolutely no idea what I'm invested in. So that can have a lot, it can have a big impact on the actual return somebody's receiving in a 401k. So I think there's a sour taste in the mouth of employees out there because they just aren't seeing the returns, or if there is, a market correction, which oftentimes happens, they weren't prepared for it and didn't move their funds to capital preservation at that time. So working with employers and their employees, I sit down with each employee individually on behalf of their employer. It's no additional fees to their employer, but I like their employees to have a one-on-one personal relationship with their advisor that's being provided by their employer, and helping them allocate those funds and maximizing their returns in the 401k. So individual retirement plans, family plans, legacies. There's some clients that I have that basically they are all set in their retirement. They're just looking to leave a nice legacy for their heirs, and estate planning and things like that. So it's really a more personal, one-on-one, depending on what the situation is. And that's where I spend my time and where I focus.
That's really great, because I also go into companies and help with financial education. And I always ask, they'll ask me a lot of investment questions, and I don't do investments. And I said, well, don't you have someone you could talk to? And they're like, yes, but they never show up. So you're right. They really are not serving their people, especially those employees, because they're losing out on so much. And they're not serving people. They're just thinking about the paycheck they're getting, and they're not truly serving these people. And I think when we do really serve people and put aside making the money, that we'll actually make more money, because They're going to be more invested. They're going to invest more. They're going to, refer people. And really that's where, we build our income from is referrals and serving people well. So thank you again for doing that, because they are also, aside from people just being able to start out, like giving only $1,500 a month, to the employees who are not being served properly by their financial advisor.
Yeah. And just to touch on that real quick is that, what I don't want and what I'm trying to prevent is the old 40-40-40 plan, where people work 40 years of their life, 40 hours a week, and they retire basically on 40% of the income that they were barely making it on to begin with. So retirement is a very important thing to me and my clients, because after working all your life, that is the time when you are to enjoy, whether it be spending time with grandkids, traveling, doing the things in life that you really didn't have the time to do, or a lot of. So I really do enjoy seeing that day come and making sure that people are really prepared, not only with their necessary spending, but also having the option for their discretionary spending and enjoying retirement, which is probably the definition of retirement, is retirement. Enjoy your
Right. It's no more work.
That's it.
Yes, you're right. And I don't think people really understand what they need to save in order to retire without having to go back to work, because that's not really retirement.
Correct.
And that's probably in those conversations, right? That they're supposed to be having with their financial advisor.
Yes.
What do you want retirement to look like? And we also have to talk about and think about inflation.
Yes.
That's real.
Absolutely right.
And then also with retirement, we can also talk about generational wealth, right?
Yeah.
We do work way too hard in this country to come to the end of our lives and be broke. We should have built up enough wealth so that we could pass that on to our children and our children's children as well, instead of just, and also in addition to retirement.
Yes.
There's no reason we shouldn't be able to do that. So then I would ask you, how much do people need for their retirement?
Well, and that's a very good question. And that's really where I start my conversations with my clients is, there's two things that are going to predicate, what is needed. And obviously those things can change over time. Obviously, if we're dealing with a young investor who's just now wanting to get started, obviously they have more time. But coupled with that is also that person's risk tolerance. Even though they're young, they may still have a low risk tolerance, and they want to be conservative, and they want to make sure that they're not too aggressive in their portfolio or their diversification. And so, I mean, to me, number one thing for me is finding out what's really important to them, because that helps me customize and build a portfolio that's specific to their needs, their desires, and their wants when that retirement day comes. And obviously those things will change over time. People do get raises, they do get bonuses, they come into more money. But like I said, starting with what they have is the basis and the foundation. And from there we build. And I really do put together a very comprehensive outline of where they are today, where do they want to be, how do they get there, can they get there, and who's going to be the disciplinary basically to make sure they stay on track. Because one of the misconceptions out there with investors, if they are up in their portfolio, it's this thing of they think that it's just going to keep going. And the reality of it is that most financial advisors, from what I've come across and where a lot of clients come to me, is the communication factor, to where they have a very passive advisor, to where they'll put them into mutual funds, let's just say, for example, and they don't hear from them for a year, 2 years, 3 years. And in that time, you could have had, you may have had 3, 4, 5 different corrections. And, hearing the old adage of "you're diversified, don't worry, that's the market, it'll come back." True. Very true. But what I am is completely opposite. I'm a very active advisor. I'm very in tune to what's happening in the market. I'm very in tune to the growth and the sectors that we need to be paid attention to. And I will be the first to advise you when I think you should buy. But I also will be that same person that says, I think we need to capture our gains, sit back, and reallocate when the time is right. So that way we don't start on a 5-year period and end up basically with the same portfolio in single digit growth over a 5-year period. That's just not me.
Right. That's a great point, because yes, the market does come back, but you've also lost, right? So now you are, like you said, starting over. Almost.
If you start in 5 years, if 5 years later after you start investing, you are where you started, you have definitely not done what you were supposed to do.
Right. One of the things you said was to start with what you have. And I think that's really important, because in our heads, or, we think, oh, we have to have this ready, that ready before we can go do this. And so I think that was a really good point you made, was start with what you have, where you're at. Because it's better to get started today than wait until tomorrow, right?
Absolutely. The longer that you wait, the harder it is, because really playing catch up. I mean, sometimes I deal with clients that have come to my office and they're 50 years old, 52, 55. And, one of the questions is, basically, what do you have set aside for retirement right now? And a lot of times, believe it or not, they say, I don't have anything. And I need to get started, and I'm nervous, and I only have 5 more years, 7 more years, 10 years to retirement. I don't know how I'm going to do it, because obviously I'm not going to be able to live off Social Security. Right. That's just a bonus, and nobody knows that that's even going to be around. We have no idea, but so that makes it a little harder. And there's a lot more pressure on an individual when they're starting at that age. So the earlier, the better. And when you do start earlier, you can start with less and still live your comfortable life, not go without, but making sure that that when you do set it aside, that's what it's there for. And one day there is a purpose, and you will reap the benefits of that purpose when your day comes to retire. A lot of people don't really understand the benefit of compounded interest. They understand it when they're paying it on a credit card and they can't stand it. But when you're making the money and you're allowing your money to work for you smartly, wisely, and customized based off of your risk tolerance and your personal needs, there's really no better way to do it, in my opinion.
Right. And I think that goes with what you said about sitting down with people, finding out what's important to them. And I think when people do that and they realize they're, and you set out this path for them to be able to do that, they're going to make more of a sacrifice and want to invest more and prepare more in order to have that lifestyle, because now they have a vision, right? It's not like, well, I'm just putting away for when I retire, but I'm putting away for when I retire because I
Yes,
want to do this, this, and that, or I want to give or build generational wealth. And I think that's really important that they have that vision and that purpose as to why they're doing it. Otherwise, they fall off the bandwagon.
absolutely. And a lot of times I hear from people, I can't believe what's happening, and that this is amazing. And I just, now, they're actually seeing it happen, and it really gets them motivated. And then what they start doing, believe it or not, is figuring out ways to add to their retirement account quicker and faster, because they really love to see the growth. And that is, once people realize that your money can actually make you money, and in my opinion, that's how the rich got rich, and that's how the rich stay rich in reality. And I'm not going to just say rich and put it in a whole category by itself, but when people do realize that money can grow with very little effort on your part, if you have the right person advising you, it's a blessing. It's a blessing for them, and they really do look forward to continuing to add and make that opportunity grow for them.
Right. And there is a quote by Chris Hogan that says, retirement is not an age, but it's a number.
Absolutely.
So,
Absolutely.
yeah.
Absolutely.
So the earlier, like you said, they see it growing and they're like, yes, like maybe
Right.
I can even get rid of this job I don't like earlier.
Absolutely.
And it brings up so many possibilities for our future. Um, one of the questions I want to ask is, because of the climate we're in right now, I mean, the market is going up, down, up, down, up, down. What would you say to people who are maybe saying, I don't want to invest right now because of the, hills and valleys right now of the market?
Well, and here's where I find myself to be a little unique from a lot of advisors or testimonials that I've received from clients that have worked with financial advisors in the past. There's certain guidelines out there, so to speak, that are, very broad guidelines, but, followed by most, and have a certain amount of percentage cash in the portfolio. As an active advisor and being in tune with the market basically 7 days a week, I mean, I live it and breathe it, and I have to. That's my obligation to my clients, to kind of see things ahead. And I'm not talking about a month or two ahead. I look out 2, 3, 4, 5 years and start planning as early as possible, and really setting up and diversifying and allocating when appropriate. But even right now with the market, the way that it's been hitting all-time highs, and it has, and a lot of that has to do with the liquidity that's been put into the market, and the stimulus and the buying of bonds by the Fed. I mean, they're just throwing money as much as possible, as they should, to be honest with you, due to the pandemic and everything, just to keep the economy going. We're obviously moving much faster than we anticipated on the inflation, and we're also, our CPI index, I think, hit an all-time year. I think the last time it was back in 1981. So there is going to be some fluctuations and some turbulence moving forward, but I have my clients very well prepared for that. And so we are sitting basically on anywhere between 15, in some cases 50% in cash, while the portfolio still grows, and we're still, acquiring the returns that we want. But you really have to have the cash available to take advantage of those corrections when they do come. Now, nobody can tell you when it'll come or what day to the exact minute, but we can come pretty close. And that's where I like to make sure that my clients are always prepared for that moment. And I think that's why we've done so well, and everybody is, very pleased, because you have to be an active advisor. I mean,
Right.
there's no question about it.
You need to be involved.
You have to be involved. And I communicate with my clients, some of them every 2 weeks, some of them every 60 days. I mean, it really boils down to what they prefer. And some of them will say, you know what, man, you just don't need to call me, because you just keep doing what you're doing. And again, I'm not patting myself on the back or saying I'm any better than anybody else. I'm just active and involved, and I communicate. And that's really what it takes. It's the old Egyptian word of work. You got to work. And that's what I do.
Yeah, and I think that's a really good point you made about communication, because I think what happens maybe is that financial advisors, when the market drops, they get scared and they don't know what to say to their clients because now their clients are going to pull all the money. Do you think that's why they're maybe not communicating?
Well, I think the problem is that they don't have any cash available to take advantage of that correction. So, I mean, I think that's the biggest difference, because what sense does it make that you may have securities and we're going through a little correction? I mean, you can't liquidate securities when they're down to go diversify into other securities, because, I mean, so the key is to find that balance. And like I said, you can't pinpoint it to the day or to the price or to the, the movement, but you can be prepared. And when that time comes, you deploy that cash that you've been sitting on. Meanwhile, you are up and doing well in the portfolio or the holdings that you still have. And when that time comes and you feel you've hit that target, and really it takes your advisor to tell you that, because I mean, I've had clients, I very clearly said, we're going to take this 200, 300% gain on this particular security. And it's not like that on every one, but a lot of times their response is, and it's just due to lack of knowledge and discipline, they think it's going to keep going. And when we capture those gains and we diversify into a different sector, or we hold on to it in cash for a minute, I get phone calls saying, "Thank you, good call." Well, you thank me all day long, but that's my job, and that's what I'm here to do, is to make sure that we don't go on a yo-yo ride for 4 or 5 years with nothing to show for it in the end.
That's fantastic. And I think that's really,
my clients love it.
No, totally. And then also, I mean, as a financial advisor, the market changes like by the minute.
Yes.
I mean, we have seen stuff happen with GameStop, right?
Yeah.
I mean, this company pretty much should be bankrupt, but
yep.
It went crazy. So yeah,
hopefully they'll turn it around. I mean,
yeah, hopefully. Yeah. And the market just changes so much, and so you need a financial advisor who is paying attention to that.
Yes.
And knowing how to make the corrections and not to be afraid of it. So that's really great. Are financial advisors just for retirement? Is there other things that you focus on?
Well, no, I mean, they're not just for retirement. I mean, a lot of times, I'll work with their CPAs, their tax preparers, a lot of estate attorneys. And, you have to have that combination of knowledge to, again, everything boils down to customization per individual. There's not one person or family that's identical. I mean, you may have similar goals, similar timelines, but there's things that happen in life. You have to be able to adjust for that, and you have to be able to advise. I mean, I have clients sometimes ask me, "Hey, I'd like to, buy a boat. I want to do this." And so I don't immediately say that's crazy. Don't do that. I said, let's talk about it and let's really break it down and make sure that this is not going to cause a burden for you financially, because it's like kind of something, same thing when people buy a home, right? They're in love with the home. They want the home. The payment's $4,000 or $5,000 a month could be. And that home taps them out. Yeah, they have what they want, but they're not sleeping at night. Things like that, those assets, they have to work for you not work for them. So it takes a little bit of education and going a little deeper than just actually what stocks to buy, what funds to buy, what ETFs to buy, and how to build a portfolio. You have to get really detailed with people, some more than others. And that's comes from years and years of experience, not only being a business owner and working with hundreds of different, personalities and income levels and job descriptions, self-employed. I mean, so no, it goes a lot further than just providing advice on stocks. You have to really get intimate with your clients and understand what's going on behind the scenes, because it really does help you plan and prepare with them. And 90% of the time, actually 100% of the time, when you do review those things, they see it much clearer and they're in agreement, and it just helps us move together harmoniously towards that goal.
Yeah, that's great. And you're like a sounding board, right? You're like this we have these voices on our shoulders saying, we want the boat, we want the boat. And you're like,
Yeah.
well, let's talk about it, right? So we have that voice of reasoning, someone that's not emotionally tied to our money, that can
Yes.
give us honest, third party, if you will, advice, on the consequences, good or bad, if we decide to take that money out and purchase the boat.
Yes.
And that's really important to have, and so that we don't make these impulsive decisions.
Yes.
And this is what
I'm sorry. Those. Sorry to interrupt, but those conversations, it takes time and effort, and that's what I don't think a lot of. And again, I'm not saying every advisor out there. Believe me, in no way, shape, or form. I mean, there's probably hundreds and thousands of them that do the same thing and have the same, morals and ethics, and really want to work with their clients in great detail. But I'm saying the majority, from what I hear, don't really want to take that time and really listen to what's happening with their clients. Because if you don't listen and understand, can you really do your job as a financial advisor, or are you just talking numbers that really make no sense to them in any way, shape? You know what I mean? They just don't get it. So
right.
Being able to connect and, put yourself in their shoes, it really is helpful. It's helpful.
Yeah. And this is why we need wealth partners. We need people to help us, educate us, talk us through things so that we can make the right decision for ourselves.
Yes.
And we don't have all this emotional spending, and then we, can't sleep at night because we bought a house that we really can't afford.
Yes.
Yes. So that is why we need
peace of mind is priceless.
Yes, that is very true.
We have enough on our plates. We need that peace of mind.
Right. So what is the biggest complaint you hear from clients or people about their financial advisors?
Well, that I can pretty much very simple. Well, two things: the returns. That's really, probably number one. And I don't think that because a lot of times I'll review their statements and review their holdings, and it's not a fact that these holdings are bad. It's just that these holdings were held for too long and through a lot of turmoil, and weren't actively engaged in managing that account. That would be I'd say number one thing is the returns. I've been investing with this guy. I rolled my 401k into an IRA, and I just have not really made money, over the last 5, 6, 7 years. And so after reviewing that, I'll make my suggestions. And number two that I hear the most is, because one of the questions I ask is, when's the last time you heard from your advisor? I mean, did you hear from your advisor last March of 2020 when COVID hit and the market was basically starting to just diminish from February to March 18th, 23rd? I did not hear one word from my advisor. Now, to me, that's very strange, right? Because I mean, if I know that if I'm giving somebody my money to invest and to build my wealth and to build my retirement, with something that's dear to my heart is that retirement, and these types of things are happening in the market, and I don't hear from the person that's managing my money, that's a big concern for me. And I like them, I would lose confidence. And that's typically what I hear the most is I don't hear from them. I don't really know what I own. And I just, I would like to start making changes. And and I think that's one of the reasons why I click so well with my clients is, and again, I'm not telling you that I'm better than anybody else. I am just involved and pay attention. So that's 75% of how a financial advisor is successful for their clients. And holding the highest level of communication. You have to communicate with people. And sometimes I'll just call my clients if I haven't talked to them in 30, 45 days and just say, hey, how you doing? Just want to let you know I'm reviewing your portfolio. I don't think there's any changes that we need to make at the moment. And if I feel we do, I'll be sure to reach out to you. And that one little thing goes a long way. And it's not for them to like you better. It's for them to rest a little bit better in their head, to get to know that somebody really is looking and somebody is checking for them, for their best interest, as opposed to their own. So I think that is the biggest complaints that I hear. And then what's good for me is that that's definitely the one area that I will fill that gap, no question about it. I mean, if that's something that, you're not getting out there with your advisor, don't hesitate to call me, because I will for sure 100%. That will not be the case.
So that was going to be my next question, was what sets you apart from your competition?
I would say that. I mean, look, like I said, I can go to 2 Toyota dealers, right? I mean, basically, I'm looking at 2 models, is basically the same. I can talk to 2 different people, and I'm not going to get the same response from each one. And if I do, that's amazing, right? But this person may not communicate with me. This person doesn't want to listen to what I'm really trying to do, doesn't want to listen to the payment that I'm looking to achieve, and how do I get it, or how do I come close to it. Again, everybody has the same product. Whatever it is that I'm offering and for investments, every other brokerage out there has the same. It boils down to the individual that's working on your behalf, and how hard are they going to work, and how are they going to communicate with you, I think is the most important. And that's what sets me apart from a lot of people that I'm not even going to say I know. I can tell you from what I hear from my clients, that is where I see the big gap that needs to be filled.
Yes, I agree with you. So if they would like to speak to you, or they need advice, or they need to move they don't like their financial advisor, they haven't heard from their financial advisor, how can they get a hold of you?
Well, basically, my office is located in Huntington Beach, on Beach in Indianapolis, and my phone number to the office is 714-536-9977, and it's just as simple as setting up an appointment and coming into my office. And just basically, the first thing that I do is learn a little bit about you and what's important to you, and then from there I will spend the time with them and actually do a full and complete financial foundation, right from where they are to that day, to the day that they would like to retire. And, coming up with those numbers and letting them see where they are, where do they want to be. Like I said, can you get there? And if you can't get there with what you currently have, how do we get there? And we'll put that plan together, and making sure you have somebody that stays on track for it, because our lives, my clients' lives and everybody else's out there, is very, very busy on a day-to-day basis. I mean, we're working, we're entertaining, we're raising kids, we have, there's a lot of things going on. And I think that the one area that makes me comfortable in relieving for them is for them not to worry about where their money is and who's managing their money, because I'm on it, basically. And that's just what I do and what I specialize in. So would love to talk to anybody. And once they are my clients, they also have my cell phone for 7 days a week. I'm never not available. I answer my phone. And I think that's also important as well. So being available and being there.
Right. Awesome. Well, if you guys do not have somebody, please contact Scott. I'll drop his information again in below this post, so that you can contact him and make your money grow, and really get somebody who cares about you and what you're trying to achieve, and not about just putting money in their pockets. So, Scott, I want to say thank you so much again for being here. I enjoyed our time together. And I know it brought great value to those who are watching. So thank you.
Well, Donette, thank you so much for having me. It's always a pleasure to talk to you. And anytime that you have any questions, or anybody that does, feel free to reach out to me. I'm always available, and happy investing.